Chinese property giant Evergrande has been sending, I think, shockwaves through financial markets. You can see the size of the decline. So is there more to come? And what other areas should we be watching that could still be affected? I thought it'd be interesting to take a look at Evergrande. We've seen quite a lot of volatility over the last couple of weeks in wider financial markets because of the difficulties being faced by China's Evergrande. If we take a look at for example, the Australian stock market index, the ASX 200 here, it had been in decline since August, but some big sell-offs as that Evergrande news broke. We have seen markets recover some of those losses since then, but clearly a crisis like this does not just affect shareholders in China's Evergrande. It has ripple effects that affects all of us, whether it's to do with property prices, our home economy, savings in pension stock markets. So I thought, let's take a look at some of the news, what's been going on with Evergrande. We've talked to a couple of experts and come back and take a look at some markets in a bit more detail. Hello, I'm David Jones from Capital.com. And as you saw there, some major declines in the price of Chinese property giant Evergrande. And it has sent, I think, at least some ripples or mini shockwaves through financial markets. So I thought, let's do a video about why what's going on with this company is so important, why we've seen it ripple out and affect other markets, and focus on one region in particular, a major trading partner of China, the Australia and New Zealand, how it's affecting those markets, and just talk about it all in a lot more detail. So as usual in this video, I'll go through some of the background to Evergrande, some of the recent news. We've got a couple of experts that my colleagues have done interviews with just to find out a bit more about the potential impact. Then we'll jump onto the platform and take a look at a couple of other markets. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And it means we can continue to push out lots of different videos throughout the week on hopefully interesting financial topics and markets. Right, let's get into it and take a look at Evergrande in a bit more detail. So Evergrande is one of China's largest companies and a Fortune Global 500 business. Its main business is property. It builds something like 600,000 homes every year, but it also has other business interests, for example, electric vehicles. And its electric vehicle business has been very much in focus and under pressure at the start of this week. Its share price falling heavily at the start of the week after it said at the end of last week that it was in serious shortage of funds. So there have been speculations on some salaries not being paid, suppliers not being paid. So again, we've seen the stock of its electric vehicle business under some pressure. But back to Evergrande as a whole. So the company, like many companies, has borrowed money to expand. Evergrande borrowed something like $300 billion. And as we know, when you borrow money, there are repayments to be made. But it has struggled in recent times to make the interest payments on some of this debt. And that is, generally speaking, something that does spook financial markets when payments aren't being met. Comparisons have been made with the financial crisis back in 2008. If you're around for that, like I was, you'll know it started off with a couple of hedge funds getting into trouble, fairly minor hedge funds, but again had this knock-on domino effect to the whole financial system of a credit crunch. We had the financial crash of 2008, and companies such as Lehman Brothers, for example, went under. So it's this fear of contagion from the knock-on effect from Evergrande is why we've seen volatility across all sorts of markets. To find out more about this, we spoke to an expert, Marcel Thielant, Senior Japan, Australia and New Zealand economist at Capital Economics. Here's some of the interview.
Well, we think the Chinese government will basically step in and prevent widespread contagion. So we think the near-term implications will be limited. We also think that Evergrande is a bit in a class of its own. I mean, most of the other big developers are actually in much better shape, and they still have pretty high profit margins. So overall, the near-term outlook for the sector is actually relatively good. Though we are concerned about the slowdown in property demand in the longer term, and that will be a key headwind for Australia. I think the big thing to watch is if there's going to be any contagion from like widespread signs of financial distress Chinese financial markets. And that is probably the most worrying thing, because that could mean that there could be widespread macroeconomic implications rather than this just being a single firm issue.
So it is that contagion that markets are worried about. And we did see sell-offs in risk assets over the last couple of weeks. Stock markets, for example, we saw a relatively sharp sell-off in US stock markets, although they have bounced back and reclaimed at least some of those losses over recent days. But Goldman Sachs estimates that the GDP, the gross domestic product of China, the economic growth, will drop from between 1.5% to around 4% as a result of what's going on with Evergrande. So this means that China's consumption of raw materials, for example, such as iron ore, could drop quite drastically. And this doesn't just affect the domestic economy. We do have a global economy, so clearly supplier economies to China, such as areas such as Australia and New Zealand, will feel the brunt of any drop-off in the Chinese economy. So to find out more about this, we spoke to another expert. We spoke to David Uren, Senior Fellow of the Australian Strategic Policy Institute.
It's a volatile situation, and it's just not clear what the outcome is going to be. Maybe that the Chinese authorities will be able to handle it. But at the same time, I think that when markets panic and things start going wrong, I think it can be very challenging for a centrally controlled government such as China's to manage. And were there to be a downturn in China, one of the things that would soften the blow in Australia would be you would be likely to see a fall in the Australian dollar. So to some extent, a fall in the Australian dollar pushes some of the economic pressures back onto consumers who wind up having to pay more for imports. But it does soften the impact on external accounts.
So highlighting the risk there for potential volatility in the Australian dollar. And of course, weakness in a currency, as David said, can be something of a double-edged sword. But let's take a look at a couple of markets that could be further affected by what's going on with Evergrande. We'll take a look at the Australian dollar and the New Zealand dollar, see where they've been this year, how they've been affected in recent weeks, and where they might go next. You'll often see concerns about an economy being reflected fairly quickly in that economy's currency. So here's the Australian dollar, here's the Aussie dollar against the US dollar. And we had seen the Australian dollar losing ground since February of this year. And again, perhaps a bit more volatility over the last couple of weeks off the back of this Evergrande story. So as a market, it is still in decline. And as we said, that is something of a double-edged sword, because on the one hand, if you're buying goods from abroad and bringing them into Australia, a lower exchange rate makes these goods more expensive. But the upside, we did say there's a double-edged sword with currency weakness, is the fact that if you're an exporter of goods, then a weaker Aussie versus other currencies can actually make your exports look more attractive than some of your competitors. But of course, the risk here, if we see a drop in consumption for resources by China, the exports potentially going to drop between these two economies. But here's the Australian dollar, US dollar, still in decline. I suppose we have seen it try to build a base over the last month or so. And I think the really big level to watch is around the 0.7 level to the US dollar. It's something that is still weak, but perhaps if we see the Evergrande situation stabilise, there will be a feeling that the Aussie dollar has gone far enough for now. Let's take a look at the Australian stock market. Like most world stock markets, the ASX 200 had a great run since the March 2020 lows. The coronavirus pandemic broke the world and investors really started to worry during late February, mid-March of last year, and we saw stock markets fall really sharply. A great run since then, but the Australian market was already perhaps faltering slightly as this Evergrande story got bigger. So you can see the size of the sell-off a couple of weeks ago. In a few days, the market going from just below 7,500, the index down to 7,100. So a drop of, what's that, about 5% or so within the space of a few days for the Australian market. As with other markets, the US S&P 500, for example, we have seen this market bounce back. But clearly you can see, just looking at the volatility today, it's still a nervous market. And it's something that doesn't affect just traders looking for where the market might go in the next few minutes, next few hours. You know, it affects those of us who may have pensions and other savings. They'll be invested in the stock market. So stock market volatility clearly has a knock-on effect across the board. And I think it will be interesting to watch this one perhaps more closely, and also the broader US S&P 500, to see how global investors are reacting to what's going on with the story for Evergrande. So we've seen some of those losses by the Aussie index clawed back, but I think it is a market that still looks somewhat vulnerable, you know, and we are still trending down from those mid-August highs. And finally, the New Zealand dollar. In common with plenty of other currencies, the New Zealand dollar had been under some pressure from the US dollar. When we see the chart sliding here, what we're seeing is New Zealand dollar weakness and US dollar strength. We have seen something of a US dollar comeback over the last 4 or 5 months or so. But again, some of the nerves from this fallout from Evergrande, you can see over the last week or so, week and a half, we have seen the New Zealand dollar still under some pressure. A base was formed in August around 0.68 for the New Zealand dollar. So that'll be interesting to see if we do see the market weaken a bit further from here. But in times of trouble and uncertainty, we do see investors and traders move towards the US dollar being seen as a safe haven. And clearly this impacts other currencies such as the New Zealand dollar. If we see perhaps more shocks and more bad news from Evergrande in the weeks to come, it would not be surprising to see the likes of the Kiwi, the Aussie, and the Australian index under a bit more pressure from here. Really interesting to watch how these markets react. That's it for this update in Evergrande. I hope you found it interesting. We'll come back to it because, of course, it is an evolving story. We'll see how things, what happens with developments over the next couple of weeks. We'll come back and do an update if there's more volatility. But for now, we'll leave things there. So from me, David Jones, and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.